Good evening everybody, Vasilis Girasis for nakedtrader.com. This week we thought we'd start off the webcast by focusing predominantly on three indices, namely the JSE Top 40, the FTSE 100 and the S&P 500. We saw that the American market sold off quite significantly after Obama's election. This was on the back of fears that America will slip back into recession after the proposed tax increases and government spending cuts. Considering these facts, the JSE has not fallen as hard as global markets. We have not really followed the foreign markets as closely to the downside, and in recent days we can even go as far as saying that we've hardly fallen at all in comparison. We wouldn't be selling out of our positions at these levels just yet, but in terms of buying or opening new trades, I think buying now needs to be directed at a very select group of shares, as we feel that the broad market is fully priced. As such, our strategy on the top 40 is to go long at 32,500. Our stop loss is 32,350 with a target price of 33,350 to the upside. The next graph we want to look at is the FTSE 100. Technically the FTSE 100 is looking bullish. We have the 50-day moving average, which is above the 100, and the 100 in turn is above the 200-day moving average. Again, I say that this is bullish on paper. However, we need to take cognizance of the fundamentals in Europe at the moment. We were waiting for Greece to vote to see if they would pass their new austerity measures. We now know that the government has passed those measures and have voted for them. So all eyes now in Europe as to whether the rest of the European Union will now vote to actually pass on the bailout package to Greece. So even though this graph is looking technically bullish, we need to also pay attention to the fundamentals in Europe. But our strategy on the FTSE 100 is to go long at 5,750, stop loss at 5,700. Our target price on this trade is 5,890 to the upside. And then lastly, the last graph we want to look at is the S&P 500. As I mentioned earlier, the American markets have sold off quite significantly recently. The S&P is now on its 200-day moving average. This is normally a good buying level. If we also look at the RSI, this is now approaching oversold territory. And then we also have an inverted hammer, which is also looking quite bullish. So our strategy on this one is to go long at 1380. Our stop loss on this trade is 1365, and we have a target price on this trade at 1425. This is Vasilis Girasis for nakedtrader.com.